Vaishali Parekh joining us on the show, from Vice President Technical Research at PL Capital. And Vaishali, hi, morning. Good to be chatting with you today. And my colleague Sharad was just highlighting some of these auto names like Hyundai and Maruti Suzuki and how they've come out with commentary yesterday saying that the sales on the day one of Navratri and the inquiry, they have been robust. How do you think both of these stocks are placed on the chart? Because auto is something, Nifty Auto particularly, where we've seen lots of action recently.
Very good morning, all of you. So I think, yes, auto sector has been outperforming, and yesterday with this positive data, I think even the two-wheelers, besides these two names, Maruti you spoke about and Hyundai, they're already in an upward trend, but I think there is a scope of further upside. So it's definitely not a fresh buy at this level, but to those who are holding, should continue holding with the trailing stop loss.
All right, not a fresh buy recommendation at this point in time, but people can continue holding with the stop loss. That's the advice coming in on select auto counters. But Kunal, do you concur with that too? Because there has been a stellar run-up on Maruti as well as Hyundai. I'm sure that the other companies will also come out with such numbers, and of course Mahindra is something that we will be watching out for because they generally make such headlines. But what's your take on the auto pack? Any of your preferred picks given the run-up?
Yeah, I think, we've been discussing that Maruti, I think, is one of the stronger performers. At least it's emerged out to be a strong performer in the last 3 odd months. And that too at a point where many of the, in the previous phases, the stock was a huge underperformer. So I think the moment the stock managed to break past about, I think, 12,000 mark, 11,800 thereabouts, you've seen a completely different texture coming out for a stock like Maruti. The stock has gone into a stronger degree of outperformance, leaving behind, many of its other peers on the four-wheeler segment. So I think in that context, I would believe that Maruti continues to look attractive even at current levels. And then over the last 1 week, 10 days, we've seen a phase where the auto stocks have just about gone through a minor corrective phase. Now, after such a steep rally, when these stocks run up 10, 20, 30% in a short span of time, if you see these stocks going through a time-wise correction and not a major price correction, that itself is a strong indication that we are looking at a major uptrend coming back into these stock prices, and this time-wise consolidation is actually a good opportunity where longer-term traders could probably try to chip into these names. So still bullish on many of these auto names from a medium to longer-term perspective, and specifically after this kind of a breakout which we've seen for the auto stocks in the last two odd months back, I think that indicates that we are looking at a major uptrend for the auto names. So not specific towards very few individual stocks, but then I think likes of Maruti, M&M, Eicher Motors, Ashok Leyland, etc. I think these stocks are looking very attractive.
Okay, so that's the take coming in on the entire auto space from both Vaishali and Kunal. We also have Chakri Lopriya, the Chief Investment Officer of Equities at LGC Wealth, joining us on the show. And Chakri, hi, morning. Thanks so much for your time today. I want to get your sense on some of these capital goods stocks like ABB India, you have Siemens, or for instance something like a CG Power or LG Equipment. My colleague was just highlighting about the impact that these stocks could see from the DGTR proposal on China for their electric steel. What do you have to make of this development, and to what extent could this bring some cheer back to some of these names?
Good morning. Thanks for having me. I think there are 2 or 3 things. One is when the GST was cut, there was the expectation that, the amount that is going to be spent on by the fiscal on capital goods would come down. But thankfully, there has been indications from the government that they will not cut that, and capex will be maintained. In fact, capex will increase from that 11.4 lakh crores to some other number higher than that. So against that backdrop, now I think the valuations are looking okay because the growth expectations have now come back to the sector, whether it's ABB or Siemens or some of the companies like Kalpataru or NCC. And moreover, therefore the demand for all the various allied services would also go up.
All right, so that's the take coming in on the cap goods space. But Chakri, along with that, just wanted to have your take on the metal pack as well, because what we understand, even Nomura is highlighting the fact that the China production cuts are getting more aggressive. That's been one of the stories that off late has been playing out for the Indian metal counters, and add to that is the steel safeguard duty as well. So it's a kind of a double bonanza coming in for the steel sector back home in India. But what is your sense, given the fact that the sector overall has underperformed so much? There were so many headwinds coming in on the sector. But do you see these factors really making something into the numbers as well? Are you bullish on the metal sector overall?
You're absolutely right on many counts. There are few things going in India's favor, and in terms of the metal sector. And one, for instance, where China is cutting production, Indian demand is increasing. Third, companies like Tata Steel are expanding their capacities at a time when demand from India is strong. And three, the safeguards that the Indian government has announced will help in producing some amount of pricing protection. So against this whole backdrop, the whole companies like Tata Steel or name it any other metal company, they're trading at very reasonable valuation of 6 to 7 times. So, and they've underperformed. And so I think, therefore, the upside, because, the demand outlook looks good, I think is worth buying into.
Okay, so that's a call coming in on some of these steel stocks. But Chakri, talk to us about the entire pharma space as well. This morning we're getting news that you have a pharma major that's come out with their breast cancer drug in India, and that's Alchem, if I'm not wrong. But what is your take on the entire pharma space? Because over the course of last week, the weekend, and this week itself, we've seen a lot of USFDA approvals coming in for the major drugs that some of these companies are looking to launch. So what's your take on that?
Here there's a tale of two stories. One is domestic and one is international. On the domestic front, companies like Mankind, etc., are well positioned because the demand remains intact. There's no major negative surprises out there. On the international front, all tariff talks aside, it's fairly clear that Trump will not increase, would not be in a position to increase tariffs on the Indian pharmaceutical generic sector. At the same time, in terms of product announcements by the companies is in a good stead, and the valuations are all right. I mean, they've moved up a little bit, but this is a sector that we would continue to be constructive on.
All right, that's the take coming in on the pharma space. But with this, Vaishali, just wanted to understand any of your stock ideas for today, which is making to your list and looking attractive right now.
Definitely, there are quite a few in fact. So one of them is Muthoot, which we saw yesterday, that it is already in a very strong uptrend, and as a disclaimer, we have also recommended to our clients. So this is a good new round of momentum setting in. So I'm looking at this stock with a target of 3130 as a trading strategy with stop loss of 2980. And the other stock in the cash category that I like is Hind Copper. That too saw very good volume and new round of momentum setting in. So I think in all likelihood this can do 320 and 285 would be the stop loss.
Okay, so that's Hind Copper that's made its way to Vaishali's radar this morning. But on that note, we'll slip into a very short break and talk more about the trade setup expected today just on the other side.
Back with the market coming out of one of the quietest sessions yesterday, at least for the better part, and then the last hour slip that we had at our hands. You did see profit taking across the board pretty much, while of course IT was one sector which was under pressure from the word go. But look at Bharti, ICICI Bank, M&M, Maruti, Eicher, even some of the auto plays actually saw some profit taking set in towards the latter part of trade. L&T has really been a non-starter. That's been the case with Reliance as well, barring a few dashes or attempts that both these stocks made, I think, in the last week or so. But Chakri, what's the case in point for some of these large cap heavyweights which have just been non-participants in this lap off the market? L&T, Reliance, classic examples.
You're absolutely right, Asha. A couple of things. One is, in case of Reliance Industries, a couple of things have happened. Globally, oil prices have come down. There has been a huge amount of volatility, and in managing that refining margins has been a challenging fact because, on the other hand, the rupee volatility has also increased. All these various factors together, kind of impacts the GRM. And second is, this new energy business is a very, very significant value kicker. That's clearly down the pike, and that's where the whole growth is going to come from. Now with the GST cuts, Reliance, the retail in the segment of the business will clearly benefit. And again, you will see an uptick in volumes. So the sum of the parts story still is very effective. L&T, on the other hand, fears of capex slowdown has pulled down the stock. But again, now with the revival of intent from the government, I think you will see L&T beginning to perk up.
Okay, so that's the take coming in on some of the large caps. And Vaishali, give us your sense on how some of these large caps are placed on the charts, because like we were talking about Reliance, it's not given a significant move in so long now. HDFC Bank also just starting to move a little bit. Help us understand where on the charts do you see these stocks placed right now, and any momentum on either side if you're seeing right now.
Well, actually talking about Reliance, talking about HDFC Bank, all these frontline stocks, I mean, they are taking a breather. In fact, it's Axis which is showing signs of revival. So I would say stock-specific movement does exist. So I would focus more on Axis Bank right now, because since a couple of days, this is trying to get into a trend. And Reliance has just been in a very range-bound move, but still the support levels are not broken. So I would say when the bias is still positive, keeping in mind 1380, as long as this support, which is very crucial, is held on. So I would maintain a range of 1380 to 1420 for now. But well, not much to say. It's the auto sector. It is sometimes the steel sector which is showing some strength, and that's about it.
Okay. Vaishali, great to have you on the show. Thanks as always for your time. Let me also welcome on board Aditya Agarwal. Aditya, hi, good morning. What stock-specific or sector-related trends are you picking up?
Morning, Aisha. Thanks for the show. So it's more of consumption-related that I see continues to be in focus, and then you see higher highs, higher lows in some of these spaces. So Blue Star is something which I like, can be looked at for a fresh trade here. Yesterday we saw a good closing in Blue Star. So at current levels, I'll be a buyer in Blue Star for a target of 2150 on the upside. Place a stop loss at 1920 on the downside. The second stock is Naukri.com. We've seen that after a consolidation stock finally has shown a breakout in trade yesterday, backed by healthy volumes as well. So my sense is Naukri can see higher levels from here on as well. So for a target of 1530, I'll be a buyer here with the stop loss at 1350 on the downside.
All right, so those are the buy calls coming in from Aditya.